This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In tonight's video, I'll be going over the datasets, earnings, and doing a technical analysis for the SPY and precious metals, specifically gold and silver, for the week of January 26th, 2026. And with that said, let's go ahead and jump straight into the datasets. Now, I did not get a chance to fully record the long-term trends video that I wanted to do, where I discuss the end of the year projections for SPY, QQQ, IWM, gold, silver, TLT, things like that. Um, I want to do a longer and very well detailed video on that, and I just did not have the time to record that today, so I will be recording that likely tomorrow when I drop my daughter off at school. If I don't have the full opportunity to record everything during that time, then it will be released later that night. So unfortunately, it won't be tonight, but it will be tomorrow, very likely Monday the 26th that video is released. Now, we do have a pretty busy week in terms of data slash earnings, so I'm going to basically just be going over what I feel is actually, key for the market or not. Um, some of these I'm going to be skipping as usual. But with that said, on Monday at 10:30 a.m., we have the GDP now. This is a preliminary reading, so it can change later. It's it's forecasted to be the 5.4% with the quarter-over-quarter GDP reading we had last week. And the current narrative, I do think that this will very likely hold at that 5.4%. Um, with it being preliminary, it can change later in the week. I do believe we have one on either Thursday or Friday, but we'll go over that. Now, at 1 p.m. on Monday, we do have the 2-year note auction. The yields have been pulling up very slightly, so very likely we will see the yields pulling up on this 2-year note auction. Um, I'd be actually surprised if we see this pull downward, but we are seeing some of the unwinding happening within the yen. So with the USD JPY pairing starting to pull downward, that can cause the yields to decrease. So just be aware of that. These treasury auctions are very, very important to watch, even if you're not a treasury trader, even if you're really not even interested in what's going on with the bonds. Um, being able to see what's happening with expectations over, the nominal period, whether it's 2-year or I believe we have a 7-year auction. We have a 5-year auction as well this week. So a lot of important auctions, but it gives you a reading of where the expectations lie later down the road. So if we see the 2-year note starting to pull up very drastically, then obviously that's telling us the expectations over the next 2-year period is starting to expect higher, treasury yields, and that affects every single market, every single, pretty much aspect of our lives right now with the treasury yields. So, um, very important to watch. I do anticipate the yields pulling upward slightly, but again, with the yen and everything starting to unwind a little bit, we can see the yields pull downward, but I would be surprised if we see the yields pull downward. On Tuesday, we have the ADP weekly employment change. This has still been very, very low, even though as of last week, this showed a green reading, but this is still very poor. This needs to be closer to 40 to 50,000 a week, and this has been really oscillating between the, I want to say, negative 15,000 to plus 15,000, give or take. And that's not really positive. That's not really indicative of showing, positivity in the labor force. So just be aware of that. We really need to be seeing either major changes in the increasing numbers, or this is going to continue weighing against the labor market. Now, at 8:30, we have President Trump speaking. Now, it has President Trump speaking on Tuesday and Wednesday at 8:30 a.m. I'm not sure if this is a specific event or something. I really don't have any details on that right now. Uh, more I find out about that, I'll, you know, be sure to include that. Now, with that said, President Trump's speeches always bring volatility, so when you're trading this week, be very, very, very aware of that. That we have two time slots where I don't know how long he's going to be speaking for. Sometimes his speeches can last 10 minutes, sometimes they could be 2 hours. So just be aware of that. These can be very, very chaotic and volatile days, especially when we're going into an FOMC where the interest rate expectation is pretty much almost 100% that we're going to have an additional pause this month. So, um, President Trump is going to very, very likely be very vocal about that. You know as well as I do that he wants the yields pulled down to 0% pretty much overnight. So, very likely we will see some volatility. And we also have the whole criminal case going against Powell right now. I have no clue about the steps of that. I think it's ridiculous, but doesn't matter. Um, very likely President Trump will be speaking about that um, during one of these 2 days, especially because Powell speaks literally on Wednesday. So again, just be very, very aware and cautious of that fact that President Trump does like to bring a lot of volatility, and volatility doesn't just mean selling. It can be both large buying and large selling. So just be very, very cautious of that. Now, at 10 a.m., we have the CB consumer confidence, and this is a very, very, very important data set. Again, we've been following this one for many, many months now, and it has been at a recessionary level. One of the very few data sets that very clearly tell us that the expectations right now are not good. So if we continue to see the consumer or the CB consumer confidence dropping, that will definitely weigh against the yields in terms of pulling them downward. Now, it is a soft data set, meaning it's not driven by hard numbers, it's driven more by opinion. However, we have gone over in previous videos how the CB consumer confidence has lined up with every single recession that has happened. So when we see these numbers start pulling lower, recessions follow. Um, that's all I really have to say about that. Unless we start seeing this pulling back upward, then it's going to continue to be a very, very concerning data set. At 1 p.m., we have the 5-year note auction. I don't really care about this 5-year note auction too much because we have FOMC on Wednesday along with President Trump speaking as well. So that 5-year auction, I'm not looking at it so much compared to the 7-year auction later this week. That's why I don't have it listed up here. Now for Wednesday, this is sort of the big day this week. We have again President Trump speaking at 8:30 a.m. And then after his speech, it's kind of just chill time until 2 p.m. when we have the FOMC. We'll have the interest rate decision with the FOMC statement. We'll have very likely some volatility over that, but I think the market's pretty set on they don't anticipate a interest rate cut. They don't really expect anything other than a pause. Now, the real volatility will come from when Jerome Powell starts his press conference, and usually the press asks some pretty decent questions. Last FOMC, I felt they dropped the ball a little bit. We will go over what happens with the press conference because, again, I usually do think that the questions are fairly good. Um, Usually those questions are what lead to some of the more volatile or volatile moves within the market afterward. So it really depends on what the press decide to ask him. If they start asking him questions about what their stance on easing, their RMP program slash QE, things like that. Looking forward to that, and again, we will go over that in Wednesday's video. Now for Thursday. We do have some decent data. We have the exports and imports. Excuse me. Now, the exports and imports are going to start becoming a lot more important now that I've actually done a lot more due diligence over the weekend for that longer video. Um, there's a lot to go over with the exports and imports. I'm not going to cover that in tonight's video, of course, but these data sets are very, very, very important. And seeing the imports dropping is extremely, extremely important to talk about. So we will be discussing that pretty thoroughly in tomorrow's video. But at 8:30 a.m. we have the export imports, and we also have the non-farm productivity. The productivity is very important. Um, I don't really anticipate this 4.9% like they're expecting. We've been seeing labor productivity pretty much dropping, so I don't really anticipate that 4.9%. I really expect a 4.8%, but we can, that's we'll see. Um, I know that the quarter three data has been trying to come in strong, even though it hasn't really been strong, but we've been seeing the GDP and everything coming in a little higher than what we anticipated. So, um, again, this non-farm productivity can hold strong. And the reason why I'm talking about it is because it ties in massively with the labor market. The labor market is one of the main narrative points right now. Now, with that, we also have the 7-year auction at 1 p.m. This is the auction I'm more concerned about this week over any of them because this is after the FOMC. This is after President Trump gives his two speeches. So this is kind of the calm after the storm. Um, this will tell us what the treasury market really anticipates out of the longer end of the curve. And I know the 7 year isn't the long end; it's more towards the medium end. But you understand what I'm saying. If we see the treasury yield starting to pull upward after those two speeches and after the FOMC, then very likely we will be seeing a lot of that continue throughout the next month until the next FOMC. Now, on Friday, not a whole lot of data on Friday. We have the PPI at 8:30 a.m. and the Chicago PMI at 9:45 a.m. Not much to say about that right now. The PPI for December, they're expecting an increase. This is the producer price index, so very likely we will see an increase in that. We have been seeing a slight increase in prices, so I would not be surprised to see that 0.3%. But at the same time, that is sort of a large increase compared to the 0% that was prior to that. So um, perhaps we could see it come in slightly cooler. We'll have to see. The month over month PPI, they're anticipating to remain at 0.2%. I don't really have any disagreements with that. We haven't been seeing a large decrease in prices or anything, but at the same time, we haven't been seeing a large increase in prices. So having those more neutral numbers coming in is very fine and reflective of what I think is going on currently. And I just very quickly wanted to bring up the CME Fed Watch just to show that again, the market is pretty much pricing in the pause almost 100%. This is for January 28th's FOMC. Not much to say. I agree with this basically after the last 2 weeks of data. I was very much so in the boat expecting a rate cut this month, but with some of the hawkish data sets, with what's been happening with the treasury yields and just the overall data sets and everything, I am definitely in the boat that we will be seeing a pause. Unless there's something massive under the surface that the market has not picked on or picked up on, then we will be seeing the pause. Now for March, let's see what the anticipation is. March is expecting a pretty large chance of a pause as well. Currently about a 15, almost 16% chance of a cut for March. So There will be a lot to go through for March's, FOMC, as, again, there won't be an FOMC for February, so there is a lot of time to process everything between that. And going over the earnings this week, we have some pretty massive earnings from healthcare to major tech earnings. So on Tuesday, before market open, we have United Health Group. I do have shares in that. I have shares back at, I want to say it's 294 right now. I have to check my average. But it's in the 290 something. Uh, I believe the price is currently like 320 something right now. So it's up in my shares. I've been very vocal about, I believe very immensely in the healthcare sector. I have been buying the dips across the board from Elevance. I have shares at 260, and I haven't checked the last price in that, but that's in my, long-term portfolio. So I've just been slowly picking up on healthcare. So Tuesday, we have UNH. That's going to be a big one. Let's see, some smaller healthcares in here. Nothing I'm really too interested in. We do have Boeing in the morning. That's going to be, important, but not a massive mover for the market, unfortunately, I don't think. In the afternoon, nothing really important. We do have NXT, which is, a small tech company, but I'm not really expecting anything major out of that right now. On Wednesday in the pre-market, we do have ASML, which is, you know, the master of all chips, of all semiconductors, basically. So, very important, but unfortunately, because they're not an American company, they don't hold a lot of the market caps like some of these other major companies will. Um, yeah, very important though, but if they fail in earnings or something, it's really not the end of the world because everybody needs their machines, and yeah, they're kind of just set in their market. So I'm not too worried about what goes on with ASML. There's Elevance Group, if I can get my mouse on it in the morning. What's really important though is in the after hours on Wednesday, we have Tesla, Microsoft, Meta, IBM, LRCX, which is Lam Research Group. I have talked about that. I forgot what their shares are at. I was starting to buy shares at 78. What are they at? They're at, oh wow, dang, they're at 2 something right now. Those are up a lot. Uh, so yeah, a lot of major tech in the afternoon on Wednesday. For Thursday in the morning, see anything important? There's Lockheed Martin, but again, that's kind of the same thing with Boeing. Um, they're not going to move the market whether they miss or, succeed in their earnings. Now, for Thursday in the after hours, there's Apple. Obviously, that's a huge earning. I swear there was supposed to be someone else along with Apple that is not showing on here, which is concerning me. Might be next week. I want to see if it's next week. ARM. Okay. Yeah, it is next week. So that will be it for the major techs. Sorry, I'm kind of rambling in this video. So yeah, major techs this week are the Tesla, Microsoft, Meta, IBM, LRCX, Apple. Those happen on Wednesday and Thursday. Friday earnings, really not too interesting. We do have SoFi in the morning and some of the oil giants in the morning as well. But yeah, that's the earnings this week. I'm really not going to be making any bets on any of these companies right now. I might play Tesla, but that's something we'll talk about in tomorrow's video.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And getting into the technical analysis, as always, let's ensure our daily time frame is turned on and our moving averages and Bollinger Bands. Now, we did have a little bit of a selling move on Friday. It wasn't what I was really expecting. I was expecting a 5 mod test to the upside and a push upward. However, it still sort of happened just in a different way. Going over everything, the market closed at 689.23, and because of that, the 5 mod will actually still be pulling upward. On Friday, I was expecting the 5 mod to move upward a lot more than what it did, and because of that, it's still pulled downward quite a bit. But on open tomorrow, very likely will be around that 687.80 range, perhaps even the 688 range. So with the overnight market being at 687.22, we're actually fully testing the 5 mod currently. Um, and we'll talk about that more in just a couple seconds here. The 10 mod is at 689.84, so that's kind of just hovering in the same spot. With the close being at 689.20, that's really not going to pull down too much at all. The 20 mile is at 688.89, and again, because the market closed at 689.23, that's actually above the 20 mile, which means that the 20 mile will continue to pull upward. The 50 mile is at 680.86, so that's currently pushed against our lower Bollinger. Um, I'll discuss the Bollinger Bands in a second after I discuss their levels, but the upper Bollinger's at 697.28, kind of been hovering at that same spot for the last week now, and the lower Bollinger's at 680.49, and again, that's been kind of sitting at the same level. How the Bollingers move are based on the 20 mile. So as you can see, the 20 mile has been basically idling in the same spot for, last week now, and because of that, we're going to see that idling within the upper and lower Bollinger. Once the market decides to break away from the actual 20 mile level, that's when we will see the upper and lower Bollinger start to either move upward or downward, based on whether we're going to be heading upward or downward. Now, going over the 5 mile. The 5 mile is going to be pulling back upward here again, which so far that is a bullish signal. However, we're not out of the woods. Obviously the 5 mile is still underneath the 20 mile, and the 5 mile is still underneath the 10 mile. The 10 mile, however, excuse me, is above the 20 mile, and where we closed with the market price, again being at that 689, it's going to remain there. So we're not going to be seeing the 10 mile crossing below the 20 mile, as of tomorrow at least. If we have a major sell-off tomorrow, then that changes things, but this is looking very good for a bounce to the upside. Okay. Um, Sort of like we discussed back in this range where we had the moving average collapse where we had that very large sell, and because of that very large sell, it pulled the 5 mile down very drastically, but it really didn't shift the other moving averages a whole lot. The 10 mile has been kind of trending around the same range. The 20 mile has just been slowly pulling upward, even with the selling. So nothing has really been shifting here in terms of our medium to longer duration moving averages on the short end, because these are obviously all within the monthly time frame. Now, my true expectations are with us having this lower Bollinger move, with us testing the 5 mile, with the 5 mile pulling upward, and now starting to contest these other moving averages. If we don't have a major sell to the downside, then this is almost certainly going to see bullish action to the upper Bollinger. And I know I've been discussing that for a while now, but the market is all about probabilities, and that's what we do here. We place our probabilities in the best spot possible. Now, with that said, and I am going to circle some of these areas that we have discussed, these ranges right here, and I'm going to mark these in green because they are, I don't like that. That's hard to see. Let's make this orange or red. It'll be red. Now, these upper Bollinger ranges that I discussed previously, um, they were very close to having successful breakouts to the upper Bollinger. Um, with those rejections, and we talked about how between that 5 mile and upper Bollinger range can be really dangerous if we don't see that massive buying, then it leads to those selling to the downside. And we see both of that occurring here. But with those failed upper Bollinger moves, we have had very large selling moves. However, even with these selling moves, we have not broken major Bollinger or major moving average ranges, and I'm going to turn on the mess for a moment here. But we have our moving averages still holding this steady range between the consolidation channels. I'm going to turn off the Bollingers for a second here. The moving averages, but basically our moving averages have been holding very strong between these consolidation channels, which is telling us that overall the market is trying to build support up in this range. Um, if the market did not like this area, they would have been selling out of it. However, every time we sell into this range, it gets bought up. Um, you know, this is where I bring out the green arrows, and these ones hopefully will show a little better. Is that from the selling, we have had pretty much buying each and every time. And very likely, I actually do want to extend this buying channel out because I do think that this is going to be actively bouncing um, off of that lower Bollinger move that we discussed. And again, very likely we will see this structure try to break out. Now, there's a few ways this is going to happen. Either we're going to have another upward rejection, and this is going to try to form bearish liquidity to the downside within this head and shoulders. Sorry, I'm talking slow. It's just I'm trying to draw while I'm talking. Um, but within this head and shoulders, and that's what the bears are really looking for. They're looking for this head and shoulders to really continue outward, for this buying to turn into a resistance, and that resistance to push us further downward. And that resistance would really look like rejection of the 5 mile, rejection of the 20 mile, and seeing a further breakdown from that range. And what that breakdown would really look like, again, would fill out this head and shoulders very well. Um, this would create the perfect liquidity to do that. And with us still holding this consolidation channel, the possibilities of this occurring are still very large. Now, I'm not in that boat. I don't think that this is going to break down into a major selling structure. I think that this is going to see more of an upward bounce, a breakdown, and a failure of this head and shoulders into the major upside. And why that's going to occur is because that breakdown here creates a cup and handle. And I'm going to delete this arrow for a moment. But that breakdown here in this head and shoulders creates a cup and handle to the upside. So even though we're going to be sitting within the selling channel very likely the rest of this week, I'm not really anticipating the upper Bollinger breakout to occur right here. I expect this to buy upward towards that 693, 696, maybe even 697 range, and then we're going to very likely see the moving averages retested, see the 5 mile retest against the 10 mile, see the 5 mile retest against the 20 mile. It takes time for the 5 mile to actually pull up above those levels because each test we have to test the 5 mile in between. So for example, if we're testing the 5 mile currently and we're going to head up and test the 20 mile, we then need to see the 5 mile pull upward and retest the 5 mile again, and then head upward to the 10 mile, see the 5 mile pull upward, retest the 5 mile again, and then we see the breakout
towards the upper Bollinger. Very likely. Unless we see this turn into a fair value gap, which would be basically buying all of this negative news and just setting the market where it previously was. And, the best metaphor for that is think about driving on a road. If there's a massive part of the road just taken out, for example, just a big chunk out of the road, that's not normal. The road's supposed to be flat, so the market was supposed to be trading up in this range. We had the Greenland news, and now the market's making that recovery. So it's making the recovery of that fair value gap. And that's just like the hole in the road. The car was really supposed to be back up here though. That hole in the road was never meant to exist, and so we just simply head back to the road after we get out of that gap. After we get out of that pothole in the road, we're back to the original level we were. So that's how I see it, and that's really what I'm anticipating here. Again, we're right between major bullish and bearish structures. However, we did have the bounce from these two major liquidity ranges, and again, these are major selling ranges for liquidity. So being able to bounce out of them to me is showing that the market wants to head upward. Um, this consolidation channel upside is a little bit of a struggle, but if we can see the market pull above this range, then very likely we're going to start building a ton of support right there. And then that's how you see that pull upward. So really that's the expectations overall is that I'm overall anticipating this to turn into a cup handle and continue to head up this buying channel. Truly to break this selling channel, and very likely this will happen towards the end of the week to next week. We do have some big earnings this week. Um, Again, that can absolutely change the direction in terms of whether we see buying or selling. For example, if we see Tesla or Apple or whoever fail in earning, then obviously that's going to translate into selling action on the SPY and help bring the SPY down. But in the overall scheme of things right now, I'm not seeing that occurring. Um, What's something else? We did talk about uh, semiconductors last week, and on Thursday, we talked about, sorry, I'm trying to scroll to it, how there was that Head and Shoulders. Let's see. My drawings have gotten a little messed up here. There was this Head and Shoulders that I was looking at. I don't know what time frame it was. I want to say maybe it was this hourly time frame that I brought up in Thursday's video where we talked about how this Head and Shoulders could potentially drop us to a really low level. Um, this is still in play. Okay. This is still very much in play, and that level could probably be around that 6 or that 316 range. Um, just because this is extremely elevated. This had an upper Bollinger move, and from upper Bollinger moves, I'm sorry, my charts are all messed up here. Um, from upper Bollinger moves come selling generally. If you follow my channel, that's when we target all of our shorts. So if we're going to see continued selling from here, it'd be fully reasonable. And this would definitely translate into selling in QQQ, selling within the SPY. Um, this has been pushing upward while the rest of the market has been, quote unquote, having some selling and seeing consolidation. So there is room to see some selling within semiconductors right now, and that selling can do a lot of damage to the overall market. However, semiconductors have been very bullish. They have been pushing upward, and if we see an upward bounce from any of the selling weight, then again, that will translate into the SPY, and very likely that will translate into the SPY hitting all-time highs. So it is very hard for me to be long-term bullish right now, or bearish when I'm seeing signals that within semiconductors, I'm really not seeing major weakness here just yet.
Within the dollar has been pulling downward. If I can pull it up, the dollar has been pulling downward drastically. This is a very, very safe level for the dollar right now. So this is not telling me or indicating to me that this is um, a range where we're going to start seeing major selling. Usually the dollar is elevated when we see bearish conditions start to persist. Um, right now we're seeing Bitcoin and Ethereum starting to pick up a little weight again. It's still very weak. It's been holding this consolidation range for a very long time now, and we have been talking about this head and shoulders here. This is still in play as well, but if we see some of that weakness within the dollar translating into Bitcoin, that means that Bitcoin should be regaining a lot of weight back. So I would be looking forward to that. That does not mean exactly that I'm bullish on Bitcoin right now. Potentially we could be having another lower Bollinger move here occurring. So just be aware of that. And overall, I have been looking for that 74,000. So I'm overall not bullish on Bitcoin, but bullish conditions within Bitcoin usually translate to a bullish market. So we will see if that carries over. Now, I did want to do a very, very quick analysis of gold and silver. And just again, looking at silver and gold, we're just going to look at their actual ETFs right now. Um, Based on full technicals and everything else, Friday was upper Bollinger Move day one, which means that from upper Bollinger day one, we anticipate a higher high into a day two upper Bollinger Move, which means that from that higher high, we do expect consolidation downward towards the 5 mile. So if you're looking to short silver on the high of the day two upper Bollinger towards the 5 mile support. Okay, I would not be shorting it or anything other than that because that's kind of suicidal right now. Um, yeah, I remember I was shorting silver back when it was at 20 something. I want to say it was back in here. Um, it was a while ago, but it was one of these upper Bollinger moves, and I did get the short. It worked. It wasn't the best, but it worked. Um, I have not touched shorting silver since then, or shorting gold since then, and I would highly discourage it until we see some actual fundamentals change. But I will discuss this in the longer term video or a longer trend video of why there's still immense upside to silver and gold right now. Um, as a buyer, you need to just wait for a while. Either you could try to buy on these 5 month retests. So each time we see the upside consolidation, to the or the downside consolidation to the 5 mile, you can buy into those and take profit at the upper Bollinger, rinse, repeat, rinse, repeat. However, you do run the risk of that 20 mile move, which we are very, very, very due for. Um, we have not tested the 20 mile since November. Uh, this was back when I was doing that short. That was when. Um, we've not tested the 20 mile since November, so you do run the risk of having a 20 mile move occur, which from the current point, that's a whole $13 of downside, potentially even further than that. Um, I said 13. It's actually $23 of downside. Um, very, very massive, which is why I really don't expect that type of downside. I really expect consolidation prior to that type of downside. So if you're going to be seeing massive selling, I do think we will see a lot better signals than what we're seeing right now. Um, but that's the risk you run when you buy the 5 mile retest, is that potentially you can go down to the 20 mile. And with it not being tested in a while, the risk runs higher and higher technically each and every session. So just be aware of that. If we do have the 20 mile test, that is a very, very, very good time to buy. and that's when I will be reloading some of my silver. I do have shares still at the 45.23. Um, Very likely not going to be taking profit on those anytime soon. Those are up very, very large. Now for gold, we are sitting within fairly same conditions. However, with gold, we do have an extended upper Bollinger move occurring here. Now, with the extended upper Bollinger move, that does mean that you should be having expectations towards the 5 mile very, very, very soon. Um, each day this pushes above the upper Bollinger is further continuation that the 5 mile should be tested even further. Because now technically, if you were shorting at the day 2 of this upper Bollinger move, the 5 mile is going to be pulling up to that on open, um, as of tomorrow anyway. And the current overnight price on gold is 645.41. We have shares back at 366 something. So we're up almost $100 a share right now in our gold. It's very, very good. I would not be shorting this for long term, but I do think that gold looks good for a short in terms of trying to target one of these 20 mile moves. We did have a 20 mile move occur as of late December, early January. So by all technical standards, you don't need to see a 20 mile move occur for at least another month, month and a half. So this can follow a lot of what silver is doing, where silver is doing this, this oscillation between let me pull this back up again, between, these 5 mod retests to the upper Bollinger. And I think gold is going to be seeing a lot of this type of parabolic type movement. Um, and likely silver will be seeing a lot of continuation with that. Like I said, the only concern that I have with silver right now is that it's been doing this for an extended period of time, and that can lead to, profit taking slash support retesting. But overall, things look very good. I would not be trying to go long on gold right now. You do want to wait for the 20 ma or even potentially the lower Bollinger, but getting a lower Bollinger move on gold right now is going to be probably next to impossible unless we see some massive, massive, massive event that shifts a lot of narrative. But a short term, short to the 20 ma isn't unreasonable from here. And that would be a whole $40 movement within the gold ETF. So, other than that, yeah, I would expect that cooling down to occur, especially with FOMC coming Wednesday. So yeah, that's going to be tonight's video. A little rambly, I apologize, but that's kind of the expectations I'm seeing within the SPY and just gold and everything. Within the SPY right now, I just want to circle back to this. I'm really, really anticipating this to turn into inverse head and shoulders, which means we would see the push back up towards the all-time highs, and from the time frame, that's looking very, very likely towards the end of this week, towards the beginning of next week. So just keep that in mind. I am bullish right now. That can change. We are within the 20 mile range, which is, sitting right between the upper and lower Bollinger. So, um, whether you're bullish or bearish right now, it kind of doesn't matter. You can play either side. This is the perfect range to take positions for about 3 weeks to even 3 months out, because again, we've been having heavy consolidation around the 20 ma, and when you're seeing heavy consolidation around the 20 ma, that's when it's a perfect time to pick up those longer positions, because that's how you get the upper Bollinger or lower Bollinger move, for the breakout or breakdown. So and with that said, I hope everyone has a great day. Have safe trades. Just be cautious being too bullish right now on tech and everything, because again, this can break down. Um, but I am bullish right now. With that said, Take care, everybody, and look forward to not just tomorrow's technical analysis, but the long-term trends video. I will be going over basically what my end of the year expectations are for a lot of different markets, from tech to small caps to treasuries to precious metals, all that good stuff. So look forward to seeing you there, and yeah, that's it. Take care, everybody.